Hi, welcome to the Nonprofit Coach webinar series. Today we've got Ask Robert Jones, our nonprofit accountant, and I'm very excited to hear what Robert's going to be sharing with us today. I am Elizabeth Finlayson. I'm the CEO and lead coach of the Nonprofit Coach, and our mission is to create a fairer, more equitable and inclusive world filled with empathy and beauty. And we do this by supporting our nonprofit clients with coaching, strategic planning, fundraising, board training, and groups like this. Here are some of the services that we offer. If you are a small budget nonprofit, transformational coaching is a great way to get fundraising best practices into your nonprofit with a really small investment, but we also do consulting with grant writing and capital campaigns, strategic planning. We have board training and retreats if the real issue is you need someone helping your board to get to the next level. And Barry, who's on here today, he also has a grant writing course with us. And you can find these webinars on YouTube and on the website. So with that, I do want to provide a little bit of context, is that these are free bi-monthly webinars. They are on usually a general topic, or they are a deep dive into a specific slice of a broader topic. We have guest speakers like we do today with Robert, but they are not meant to replace any kind of paid training or services you get from Robert or me or anyone else. All right, and with that, I'm going to turn that over to our lovely Robert, and he can tell you a little bit more about himself. And I'm so excited. So I want to say thank you, Robert, for being here. Thank you for sharing your expertise with nonprofits around the country and the world. And go ahead and take it away.
Thank you so much, Elizabeth. So again, my name is Robert Jones. I am the CEO of RP Associates here in Chicago. We really do focus on, charitable entities only. So that's our, nonprofits, private foundations, and some of our charitable trust returns as well. I've been in this work for about 12, 13 years. I've always, lived here in Chicago, and I sit on two boards, one where I'm board chair or president, Infant Welfare Society of Evanston. And the other one is called Pro Bono Network, where I sit on the finance committee. So I am really looking forward to today. I'm really looking forward to talking about what I actually love doing for a living. And of course, if you have any questions, don't let the suit and the tie scare you. Okay. So I'm a fun person. So hopefully this doesn't intimidate you too much. Okay, great. So let's get started. So some nonprofits actually receive Irs notices, believe it or not. And so what should you do when that happens? Well, one of the notices that they receive is if you are not filing your tax returns, or you file them, you end up filing them late. So for example, you file your tax return, let's say a few days after the due date. Well, the IRS actually charges the nonprofit $20 per day when it's late, up to $10,000. So once you hit the $10,000 max, they don't charge you anymore after that. Hopefully you get to that point. But if that was to happen, what we do here at our firm is that we write what's called an abatement letter. So here's a cool, fun fact. Well, it's not that fun, but here's a fun fact in a way about this situation. The IRS has given nonprofits what's called a first-time abatement letter, or that they can have their situation abated just one time. So if you run into that problem, we can help draft a letter on your behalf using some of the legal languages and some of the tax codes that can help with that, to have that fee abated. So you can't do it often, but I know for a fact that they will waive it at least the first time. I've had, in my experience, where this has happened 3 times, meaning the client applied for, sent a letter in for this first time abatement, and then they end up doing the same thing again a few years later, and the IRS waived it again. I've only seen that 3 times where they waived it again. So don't make a habit out of not filing your tax returns. but just something to think about. If you do receive an IRS notice, there are ways to getting that abated. Okay, let's go to our next slide. So our next question is, how do I know if I'm meeting the public support test? Well, the average person may not even know what that means. So if you actually have your IRS determination letter in front of you, or you want to grab it later on, there on the right-hand side of that letter, it tells you what type of public support organization you are. Most of the times we have people under what's called, let me get the right tax code for it. Most of the time you're under what's called a 170B1A6, or you are what's called a 509A2. But the only way for you to find that out is if you actually look at your determination letter. There's a difference between the two. Number one, the 170B1A6 organizations, according to the IRS, have to meet this public support test by making sure that 33 1/3 of their income is coming from public funding. Okay. Now, with the 509A2 organizations, those are organizations that usually will push toward investments. So there's nothing wrong with public organizations investing, meaning if they open up a Schwab account, Fidelity, or whoever. But they have to be very careful that majority of their income and revenue is not streaming from those investments. And so that's when a public support test comes into play. And every year when you file a tax return, you have to file what's called a 990 Schedule A. Next slide, please. Or next, we're going to actually show this situation, okay?
So I'm going to ask you to bear with me for a second. I'm going to stop sharing the slides, and I'm going to go to a section where Robert is going to show us how, and I'm going to admit someone else, how to get in and look at the Schedule A. So give me a moment here.
This part is really, really crucial for the organization. The first 5 years, you don't have to meet this test, and I'll show you that in a moment. So if you look at line number 7, so line number 7, organization that normally receives a substantial part of its support from the government, from a governmental unit, or from the general public. And that, remember we talked about that tax code 170B1A6, that's that portion. Now, if you go further down to line number 10, this is the 509A2 we talked about. So it's an organization that normally receives more than 33 1/3 of its support from contributions, membership fees, gross receipts, so on and so forth. So it's a difference between the two. So you have one that says, hey, you need to receive at least this amount. And the other is you have to receive a substantial part of it. Okay, let's scroll down now to the next page. Okay, right here, perfect. So again, the first 5 years of your organization, you don't have to stress about the public support test. But after that 5 years, you really do have to worry about that. Most nonprofits do not run into this situation. Unless they're heavy into the investment pool, but we have to be very careful with how we receive funding. So, for example, we have, and not to confuse you, but sometimes people will get into what's called unrelated business income, where they decide, okay, our nonprofit, we feed the homeless, but we really love selling these shirts, right? And so they sell so many shirts that a large portion of their income is coming from selling the shirts versus from the public. So that's when that's the piece where we have to be very careful about. Okay, let's scroll down a little bit on this page. Okay, look at line number 13. So it says first 5 years. If the Form 990 is for the organization's first, second, third, fourth, or fifth tax year, as a 501c3, check this box and stop. So that's what we were talking about. So the first 5 years, not a lot of stress about this, but year 6, that's when it becomes real. So if you look at line number 14, it says public support percentage for 2020. So what happens is the tax form calculates all of those line items that you put in 2020, and it spits out a percentage. And if that percentage is not more than 33.33%, you have a little bit of a situation that we got to talk about. So the IRS is thinking, are you running a nonprofit or for-profit? Because they're differentiating that, they're sourcing the income, and they're noticing that situation. So if you are a nonprofit right now and you're over the 5-year mark, you may want to start really thinking about this going forward. Okay, great. So if you think of any questions at the end, definitely we can revisit. All right, let's go back to our presentation. Next question is, how can financial statements assist my organization with funding? Okay, I love this part. So when we think about organizations who have great financial statements, and great does not necessarily mean they have a lot of money. Great means that they are in compliance with what's called GAAP standards, generally accepted accounting principles, and they're clean, meaning if I never look at financial statements, will I know what I'm looking at? So for example, do your financial statements break out program services, management, and fundraising expenses? So it's general question for now. We don't have to answer it, but I want you all to actually think about that. So I'm gonna give you an example. Someone wants to donate money to your organization, and the first thing they ask for is IRS determination letter, a tax return, and then they ask for financial statements. And when they're looking at your financial statements, they're looking at how much did this organization spend on the program itself? And so sometimes we see this where the program expenses will be, let's say 50,000, and then management says 100. And then fundraising is like 10,000. This is an exact example. Someone who is used to giving money to organizations, 9 out of 10 will not give you a penny, because your management fees or management expenses are too high. So in their mind, they're thinking, wait a minute, I thought you help homeless people. Why is there so much money being spent on the executive director? Or why is so much money being spent in advertisement? Or how are you spending so much money in this bucket, but not a lot toward the program? So people who donate money to you, most people, especially large organizations like Walmart and big corporations, if they're donating what I like to call real money, 50,000 or more, they're looking at that program budget and program bucket, and they want to see how much you spend in that arena. So look at your financial statements over the next couple of days and really think about that. How much am I spending regarding the program itself? Okay, and that really does help with funding. Do not think of your organization as small, but think of your organization as, where do you want it to go? And so instead of looking at it going, I don't really need an accountant, I don't really need financial statements because we only file a 990N, and we're going to get into that in a moment. That's not a good way to think of it. You want to think of it in a way that of a growing perspective, and having financial statements, even at the early start of your nonprofit, will help you with funding. A true story, one of my clients came to me and I'll actually, you know what? I'm not going to talk about this now. We'll talk about it on the tax return part, because I got a fun story I got to tell you all about what happened with him on the next slide. Okay. So this kind of goes a lot in line a little bit with the actual financial statement. Should I file a 990N, an EZ, or a 990? Okay, so let me tell you the difference. 990N tells the public that you only brought in revenue of 50,000 or less. The 990EZ tells the public that you brought in between 50,000 and 200,000. And the 990, the full 990 says we raised in revenue more than $200,000. And so that's the difference. Now, I'm gonna tell you something funny about this. I personally do not like the 990N. That's just my personal opinion. It's not law, but I realize why it's there for nonprofits. Because you probably, if you raise only 50,000 or less, you probably don't have a budget to pay someone to do a 990 EZ or a 990. So that's 100% understandable. However, if you budget correctly and spend the money on someone preparing the 990 EZ or the 990, even if you're not meeting those thresholds, that gives the public something to see. Because with the 990N, they don't see anything. They just know, okay, this is just a 990N situation. But at least it gives the public to see, because on that 990 EZ or 990, they have what's called program service accomplishments. And that is where you can brag about your organization, how you help people, and what you have done during the year. And the public loves to see that, especially those who love to give. So one of my clients came to me a couple of years ago, and he had only brought in about $17,000, but he had only been operating for about 3 months. So that's pretty good. And he says to me, we have to file a 990N. I said, well, let me tell you about this 990N, and I broke it down to him the way I just did to you. He says, okay, fine. You convinced me. I'll do the 990 EZ. And I really wasn't doing it to get money out of him, to be honest. I really was doing it based on what we just talked about. And about 3 months later, he got a call from the Ellen show. And she says, well, not her, of course, but the show says, can you give us your 990? Can you supply that to us? Because we don't see it on the IRS website yet. You said you found it, but can you send it? And he sends it. And he calls me up. He goes, oh my God, I'm so glad you told me to do that. They were able to see our accomplishments. He ends up going on the Ellen show. The organization ends up getting $25,000, and he literally blew up overnight. And I'm not making this up. Okay, you can look it up. His name is called Dion's Chicago Dream. They did a great job last year. They're doing great now. And, and I really do feel strongly about showing the public as much as possible, because it is open to the public anyway. So why not take a step forward in doing that? So I really do feel strongly about this. Of course, if you have it in your budget to afford this type of service, definitely is something to look into. Okay. Resources. I love resources. I'm be honest with you. I love it. So one of the resources I love is TechSoup.org board source and guide star. Let me tell you a little bit about TechSoup. So TechSoup is great for nonprofits, because what happens is, especially for the new nonprofits, QuickBooks, because I use that for every client I work with, it can be quite expensive. So TechSoup allows nonprofits to buy a QuickBooks subscription for 1 year at a very, very discounted rate. So right now, QuickBooks Online Plus Edition costs about $80 a month. But if you purchase it through TechSoup, you pay $75 every year. So that's a humongous, significant difference as far as price. So definitely look into that. Board Source is really, really good because it allows you to get a little more understanding of how nonprofits operate. So they have a lot of great resources on that site, and I would definitely look into that. Now, GuideStar is great. Most funders who want to fund nonprofits, they go to GuideStar. It's a online database. They usually pull your tax returns from the IRS, or you can actually sign up on GuideStar and put in all of your information. So that website is really, really important if you want more notoriety and more exposure. GuideStar is great for that. Okay. And our next slide. Gotta love questions, right? So again, if you have any questions, I always tell people this: if I do not know the answer, I know someone who does. So let me know if you have any questions.
Could I ask one?
You sure can.
First of all, thanks for all the very, very useful information. I have been taking copious notes. I wasn't expecting to take notes, and I've got like a page and a half already. So thank you for that. At what point would you, is there a threshold, say in terms of revenue, at which point an organization should stop doing its own books and should hire an accountant or a bookkeeper?
It's a really good question. I would say start from the beginning. Hiring an accountant, I'm not going to say you want to hire the right one. So if you hire a nonprofit accountant, that particular person should be able to direct you in the beginning. But it all depends on the budget, how much money nonprofits have. I do realize our services are not, not the cheapest, but someone like me in particular, I love being resourceful. So you're not just paying for me to do your numbers, you're paying for a lot more that comes with it, being resourceful and helping out in that way too.
So my sense is that if somebody hires an accountant from the beginning, they're sort of saving money along the way too, maybe by adhering to that accountant's advice.
I agree. Yes.
Is there a place? I have so many clients who are always asking how they can find an accountant who specializes in nonprofits in general. Is there a place where accountants advertise as nonprofit specializing accountants?
Oh no, that's a good question. Yeah, I don't. It's funny. I don't run into a lot of. I may know two people who do what I do. I know there's more, of course. I know that for a fact, but you don't see that often where they specialize in nonprofits. Believe it or not, most people who are accountants don't like nonprofit accounting in taxes. So it's kind of funny. But good question.
Oh, God. I have a question. When you were talking about the designations from the IRS, so like we've been a 501c3 since, since we actually started. We started getting money from the state of New Jersey. They fund us. We do HIV prevention. And so we've only had the 501c3. So, I mean, is that a good thing? I mean, am I supposed to be out, because I don't handle the accounting. I'm just, I'm just the ED. So I'm like really dumb on these things. I know we've had an accountant, off campus, and we've had, and he's been doing our audit because we have to do audits we have to get audited every year. So the majority of our funds come from the state of New Jersey. So that 501c3, is that the only one designation I should worry about? I mean, when you rattle off.
No. I know what you're asking, and I know how it can be confusing. So you technically are a 501c3. You
Right.
are. But on that IRS determination letter, it just gives what type of public support. So you're still a 501c3, yes, but when you go to your IRS determination letter, on the right-hand side, it'll show your EIN, and it shows like a bunch of other little language. if you go down to the middle of that, you'll see which type of public support you should be receiving.
Okay.
Yeah.
All right, good. Thank you.
Oh yeah, no problem.
Robert, if somebody was out of compliance with that, would you expect that their accountant would have seen that in the process? So like, you know, even though like in this case, he doesn't know at the moment off the top of his head, that probably would have come up in the audit or in the accounting process if they were not fitting that?
Yes. So usually this comes up when me personally, it comes up when I'm doing a tax return. So whenever someone comes on as a client, the first thing I ask for is the IRS determination letter, because it's impossible for me to click the right box that we showed here if I don't see the letter. Yeah.
I'm also glad you talked about tech soup. You know, we have somebody who does our computers and things, our IT guy. And I've noticed every time we get a new computer, it's from TechSoup. And I was like, I had no idea who they are. And now I do. So you just made me a little bit smarter today. Thank you.
Oh, no problem.
Oh.
Robert, I have another question about something
Sure.
that you kind of opened the show with. You were talking about IRS notices and things of that sort. I have a number of clients who seem to count on filing tax extensions every year. And it's fine. It seems to be perfectly legal. For me as a grant writer, it gets a little frustrating because during the first and second quarter, especially by the second quarter of every year, foundations are asking for the previous year's 990. And if there's been an extension that's been filed, it requires some explanation. It usually works, but it doesn't in every case. Is there a rule of thumb for, I mean, is it just okay to file them, or is there any advice about maybe trying to file by April 15th every year, or anything that you can tell us about that extension?
No, that's a really good question. So when I see, I'm gonna look at it, I'm gonna talk to you from a funding perspective, because I've sat at those tables and I know exactly what you're talking about, Barry. When I see that, and then I look at how much money they brought in, I'm like, why did they file an extension? They only brought in $100,000. Why do they have to do an extension? Usually you see an extension when you have an audit situation, because the audit takes a long time. Somebody like Gary, who may, if he receives more than $750,000 from the state or the government, he has to have an extended, a special audit called a single audit. Those could take months. So that makes sense if he filed an extension. Someone who files a 990 EZ, there's a reason for them to have an extension. And that can't look bad.
I would think so. One thing that I've heard just sort of anecdotally is there are some nonprofit leaders who think that they get a better deal from their tax preparers if they wait until after the tax season, when you know there's less work for the tax preparers. So for the couple of dollars that they save, they certainly seem to create a lot of aggravation for their grant writers. I'll say that.
I agree with you on that.
Yeah.
Yeah. I would just like to say on there, that's like, I think a mindset thing I would like to see changed in the sector is that sometimes, you know, having switched from the nonprofit sector to the for-profit sector, everybody in for-profit is interested in growth. In the nonprofit sector, of course, we're interested in growth because we need to be feeding more homeless people, solving more social problems, but we can be so penny wise and pound foolish sometimes. And I really would like us to get a little bit more in an investment mindset and less in, oh my gosh, if we just had a volunteer do this at 11 o'clock at night, I'm sure we'd get through this. It's like, is that really the best way to run any kind of organization? I'm going to go maybe the first year or so, but after that, please don't do it for your own health and sanity and everyone else's.
That's a great question, Barry.
Thanks.
I had a question. You gave an example early on about like when somebody, okay, there's an organization, let's say $100,000 in management, $50,000 for programs. When I've seen an organization that looks unbalanced like that on paper. A lot of times what I have found is that it's more of a misattribution or a misallocation on paper, that there's no way really that they're spending all that on the management. They just didn't really notice that a lot of the things that they were doing could have been put under the program, and they only counted, like, say, the paper clips they used in the program, et cetera. Would you say that's true when you're going through people's finances, or it is more of a case where, like, somebody's like, you know, got a wealthy executive director and no programming going on?
You're 100% on point, Elizabeth. It is, they just don't know. So for example, they may pay the executive director, let's say 50,000. And sometimes I've seen this where they'll put that 50,000 all in management. And then the first question I ask is, so what does he do for the organization? And then they start talking about it. And I'm like, so 90% of his time is spent on programming? And they go, yeah. I go, then we need to put 90% of that salary in programming. And so it's just education at the end of the day for most people.
And Robert, shouldn't what you're talking about right now actually be set up in QuickBooks, for example, so that it's very clear that the executive director's salary for every $50,000 that's paid every year, it's automatically apportioned in QuickBooks, so that 90% is allocated toward programming and in the scenario you just described, and so on. That should be done in QuickBooks, right?
Yes. Very true. And so it gets a little dicey, of course, when you have multiple employees, you got, 30, 40 employees. But 9 out of 10, they are focusing on the programming. It's a little hard to gauge unless you have some clients have timesheets and things of that nature. And some take a general approach where everything they do is 90% programming and 10% management or whatever the case. So it just depends.
Can I ask one last question?
Sure.
We have one more minute. Is there anything that you're aware of that is pandemic related that will affect taxes or even bookkeeping for the next couple of years? I was just working on a proposal this morning, and the budget looks really, really bad because it's for a performing arts organization that didn't perform last year. So they show very little that went into expenditure that went into programs. It looks like all of their money goes to admin and fundraising because that was all they had to spend money on last year. They weren't performing. So are there special considerations that you're aware of, or any allowances either at the IRS level or just in the way people read financial statements?
That's a good point. One of the things I would suggest is on the 990, there's a schedule called a Schedule O. It's where you kind of have a narrative of things that you want to put into the tax return. It's nothing wrong with saying, due to the COVID-19 pandemic, this is why our programming was a lot lower than in previous years, and explain why. We are performing arts. We could not perform. And so it's nothing wrong with putting that kind of language into the tax return and on the financial statements as a narrative.
Thank you.
When we were talking about the public support test, I realized I hadn't looked or thought about that in a really long time. So I wanted to refresh about it, and I found it was interesting. It looked to me that it's not maybe as straightforward as it first seems. At first, it might be like, oh, add up grant dollars, add up this, it goes in this. But it seemed to suggest that, for instance, if you're a performing arts organization, say your ticket sales also counts as public support or something. So I guess the question I have in there is, I feel like that's where your expertise would come in, correct? Is somebody who's this is it, this isn't it, versus maybe a layperson going through and just filling out a form and thinking they're doing it right, which is what I might be tempted to do if I were a small nonprofit.
So because I think I'm understanding your question. You're saying some people, they may not understand it, or are you asking about the different like various streams of revenue?
I guess what I'm saying is it looked more complicated the more I dug into it than it seemed at first. And so I guess I would want to know, like, from your experience, obviously doing this over and over again, is that the case that, you know, it's maybe not as simple as, oh, just adding up, here's your grant revenue, here's this, here's that, and it's filled in, but really that some things may count as public support that you may not realize, and so maybe passing the test and not realizing it.
You know, that's good, because so when you think about selling, like, especially like performing art, one of my clients, they like a flamenco dance company basically, and they you know, have performance revenue. Well, that's not a contribution, and so it's not, that doesn't fall under that. It wouldn't go into that equation. It really is selling. They sell tickets, and if majority of their income was to come from that, they would run into a little bit of a situation. So yeah, so they really, it's all about how you allocate it, but you can't misallocate, and that would be, you know, pretty bad too. That Schedule A also ties to the revenue page. So on the revenue page, it has a breakout. Performances, you can put, you know, you can put program service revenue and put in performances and things of that nature. So there's a big section on the revenue page in the 990 where it has public support dollars, basically. And public support dollars would be someone walking up to the front door, writing a check for 10 grand. That's definitely from the public.
Got it. Okay.
Yeah.
Do we have more questions?
Yeah.
All right, this is good. Good questions here. All right, so I just want to say, like, thank you to Robert for providing this really amazing offer. Robert, I'm going to let you create this for the people attending today. So go ahead and talk about this.
So a lot of nonprofits, when they first call us, they don't really know where their books are. Meaning, is this correct? Is it not correct? You know, all of that fun stuff. And so what we do is we do what's called a diagnostic. Kind of like when you go to get your car, diagnostic on your car. So we do that. And we look at if you have QuickBooks, we look at your QuickBooks, you grant us access, we go through it, and we create what should change, how these things should look, some of the red flags we see, different things of that nature. So we create like a report for you. And that fee for us doing that is $500. So today, if you were to, you know, call us and we were to review your books and produce this report, we're going to waive that fee.
Everybody get how really awesome that is. I think that's really fantastic. So thank you, Robert.
You're welcome.
So obviously, to take advantage of something like that, you would have to know how to contact Robert. So here it is. On here, here's Robert's information for RP and Associates, the phone number and the email address and his website. And then, of course, you can get in touch with the nonprofit coach teams, their phone number and email, and the website where there are some more resources. Thank you. Thank you, Robert. Thank you, everyone, for being here. Really appreciate it. And have a wonderful day.
Thanks very much.
Thank you.
Thank you very much.
Bye, everybody.
Bye-bye.
Bye.